2025, a complete guide for business and investors. The Securities Exchange Board of India, or SEBI, plays a crucial role in regulating the Indian securities markets. Whether you are an investor, financial professional, or business entity, compliance with SEBI regulation is essential. SEBI regulations. In this video, we will break down the key regulatory requirements, registration process, and best practices to ensure smooth operations and avoid penalties. Let's dive in. Understanding this SEBI regulatory landscape, SEBI is responsible for regulating the securities market in India, ensuring transparency, fairness, and investor protection. Here, what you need to know is SEBI oversees stock exchanges, mutual funds, brokers, and investment advisors. Key regulations include the SEBI Act, insider trading regulations, and listing obligations. Another important thing is non-compliance can lead to penalties, legal action, and business restrictions. I will explain you around 14 regulations and their purpose also. SEBI Act 1992 establishes SEBI's powers and functions to regulate the securities market. And SCERA 1956, Securities Contracts Regulation Act 1956. It governs stock exchanges, securities contracts, and trading practices. Another one, SEBI Prohibition of Insider Trading Regulations, PIT Regulations 2015. It prevents unfair trading by individuals with access to non-public information. Fourth one, SEBI LODR regulations, listing obligations and disclosure requirements regulations 2015. It ensures listed companies disclose material information to protect investor rights. Fifth one, SEBI substantial acquisition of shares and takeovers. SEBI SAST regulations 2011. It regulates mergers, takeovers, acquisitions of shares. Sixth one, SEBI Mutual Funds Regulation 1996. Lays down compliance requirements for mutual fund companies and fund managers. Seventh, SEBI Foreign Portfolio Investors Regulations 2019 regulates foreign investors in Indian markets. Eighth regulation, SEBI Alternative Investment Funds Regulations 2012. SEBI AIF regulations. It governs private equity, venture capital, and hedge funds. Ninth regulation, SEBI Research Analysts Regulations 2014. It ensures fair and transparent investment research and analyst conduct. 10th regulation, SEBI Investment Advisors Regulations 2013. It regulates investment advisory services to protect retail investors. 11th regulation, SEBI Delisting of Equity Shares Regulations 2021. It provides rules for voluntary and compulsory delisting of shares. 12th regulation, SEBI Prohibition of Fraudulent and Unfair Trade Practices. Regulations 2003, it prevents fraud, price manipulation, and unfair trading practices. 13th regulation, SEBI Credit Rating Agencies Regulations 1999. It governs rating agencies to ensure credibility and transparency in financial ratings. 14th regulation, SEBI Depositories and Participants Regulations 2018. It regulates depositories and participants in electronic securities trading. These are the regulations under SEBI. SEBI registration requirements to operate in Indian securities market. Business must register with SEBI under different categories. Suppose stockbrokers, investment advisors, portfolio managers, and credit rating agencies must register under specific SEBI guidelines. The required documents typically include business registration details, financial records, and compliance declarations. To avoid delays, ensure all documents are accurate and complete before admission. Best practices for continuous compliance is staying compliant with the SEBI regulations requires ongoing efforts. Here are some of the best practices. What are the best practices? Regularly review and update compliance. The compliance policies based on SEBI amendments. Monitor transactions and maintain accurate records to prevent regulatory breaches. Implement internal controls and compliance teams to ensure continuous adherence. Avoid regulatory penalties because huge penalties and legal actions failing to comply with SEBI regulations can have serious consequences, including heavy fines and restrictions. Understand the penalties associated with non-compliance, such as trading bans and reputational damage. Conduct periodic audits and risk assessments to identify potential compliance gaps. Seek professional legal and compliance advice to ensure all regulatory obligations are met. By staying updated on SEBI regulations, implementing strong compliance frameworks, and seeking expert guidance, business and investors can navigate the Indian securities market confidentially. If you found this video helpful, don't forget to like, share, and subscribe for more insights on financial regulations and compliance. Drop your questions in the comment below and we'll happy to answer them. The disclaimer is this video is for informational purpose only, does not constitute any legal or financial advice. Viewers should consult legal and compliance professionals for specific regulatory guidance. Thank you.